Ladies and gentlemen, welcome to the study. Going to be talking about TLT. What exactly is this? Some of you may know, some of you may just be pretty confused about what exactly is this asset. Well, I got you right here with a quick short video giving a breakdown of this interesting investment vehicle. So, TLT is actually part of iShares, big BlackRock group of ETFs, and what it is exactly is that it's the 20-year plus Treasury bond ETF. So exactly what it does is that it tracks the investment results of the Treasury 20-year bond index, which generates by investing into the U.S. government bonds, and it's a great way to track the bond market. It heavily resembles the 10-year, which is a lot of investors look at using the 20-year. It kind of helps give it further confirmation on the larger time frame scale. And what I have here actually is a chart pulled up of TLT on the daily. So this is a year's worth activity of TLT. The confusing part about TLT is that it is actually the inverse of the 10-year or the 20-year or whatever bonds that you're looking at. And I will pull up another chart here on Trading Economics. Great website. There's a lot of information here in my previous video. I've also showed you guys another resource that's provided through this website. If you scroll down, you go to the bond. I'm going to click bonds, and then you have United States. We'll go here. And here we are. We have the United States government bond, 10 years. Tells you here, this is the U.S. 10-year Treasury note, reverse course, hedge up. So it tells you a little bit of a history or like any news, current updates on it. And as you can see here, I have a daily chart of the U.S. 10-year note bond yield. What you're going to notice is that, check out the beginning of the chart of TLT. It was at a high of $163.19. In the beginning of the year, we could see that on here, rates were very low, 0.76. Yeah, at 0.72, 0.693. So as the rate, the bond yield rate, right, that goes down, TLT will go up as a stock. So if TLT is going up, that means the bond yields are going down. If the bond yields are going up, TLT, the ETF, the stock that you're trading, is going to go down. So it is an inverse relationship. That is one of the most important points about understanding this. A lot of new investors do get mixed up on, hey, if the yields are going up, why isn't TLT going up? Simply because it is the inverse, and they state that clearly in the ETF prospectus and all that good information. So if you can clearly see it when looking at the left chart and the right chart. Left chart, we have TLT going up, down, volatility. These are daily candles zoomed out. And when we get to the beginning of 2021, we have rates climbing upwards and this sharp drop. And if you go here, check it out, 2021, you have this stair-stepping escalation of rates and all the concerns and inflation in the beginning of the year that were taking place on the headlines. We had all of that happening, and you could see that TLT clearly reflected that. So why is this important to know? Because you can actually use this ETF vehicle to actually possibly make a trade on it, whether you want to do it with options or shares or any of that sort. I personally like to put a little bit of money exposure towards options if I do think that there's going to be a significant move in the ETF, the stock price, where it can generate a return on my options contracts. So it's kind of like another creative way of hedging your portfolio assets if you're expecting some volatility in interest rates or bond yields or any of that sort. Maybe the Fed is going to step in and look at policy you can definitely get exposure here through playing TLT. So it's a very cool idea. It can be very confusing at first, but if you put the charts side by side, you will see the clear relationship. And the most important point about trading TLT is that it is inverse. As TLT goes down, bond yields go up. Bond yields go down. Where does TLT go? I'll let you think about that for a second. Bond yields go down, right? They're going down. Check this out. And then boom, TLT going up. There you go. You have the answer right there. Another good thing about knowing this and using it to your advantage for investing or trading is that normal relationship between stocks and bonds, right? If you know what the bonds are doing, you have a pretty good idea what the stocks are going to be doing. Kind of the same thing. If you know where stocks are driving towards, if stocks are going up, then the bonds are going to be not as much demand. When there's not as much demand, you're going to have those higher yields. And then when everybody is rushing into it, you are going to have a lower yield, like we saw with the COVID crash in 2020. If you understand these concepts, it can do a lot for you in the long run, and with just overall investing knowledge and giving you that advantage, being able to anticipate those global market pressures, because this is something that the whole world uses. Everybody has their own interest rates, their bonds, and the most important thing about the U.S. bonds is that they are backed by the full faith and credibility of the U.S. government. So it's a very big deal when you are looking at this, because the bond market's actually bigger than the stock market, believe it or not. Not too many people talk about it, but there is a lot of activity that takes place in the bond market. So, guys, this was a quick video. Got a little bit longer than I was expecting, but if you like it, throw me a like. If you want to learn some more, make sure to subscribe so you stay up to date on any new videos, and I will see you in the next one.